Welcome to the Fear and Greed Business Interview. I'm Sean Aylmer. Ethical investing has really taken off in the past few years. While it might be gaining favour, it's hardly new. In fact, my guest today is from a fund that's been doing it for almost 40 years. Australian Ethical has been focused on ethical investing since 1986 and now has over $9 billion in funds under management. The fund is in a really interesting position, having decades of experience and now seeing a surge of investors coming across to their way of thinking. And it really is a surge. According to Investment Trends 2023 Responsible Investing Report, awareness of responsible investing has jumped 20 percentage points in just the last 2 years. Remember, this is general information only, and you should seek professional advice before making investment decisions. John McMurdo is the Chief Executive Officer of Australian Ethical, which is a great supporter of this podcast. John, welcome to Fear and Greed.
Great to be with you, Sean.
So you've been at this for a while, but why do you think there's so much momentum right now? Why are people pushing towards ethical investing?
Look, it's partly fear, Sean, and I'm not quite sure it's greed, but it's certainly about opportunity. And you're right, what is clear is that the awareness of responsible investing has grown at such a rapid rate over the last 3 or 4 years, as you alluded to. Now, somewhere in the order of 82% of all Australians are aware of the existence and the benefit of responsible investing. And look, I do think that fear is now visceral and actually felt in the real world. In Australia, we've seen the devastating and personal impacts caused by climate change and related weather events. We've all experienced, the bushfires in the last few years and more recently floods, and we all worry and even know that they'll get worse. And we see them not only in Australia, but in every part of the world on our TV and news feeds. So, there is fear about the world that we're creating, and I think people are frustrated by the pace of change from governments and want to be able to do something. They want to be able to do anything, actually, to try to take action against climate change, including where their own capital is invested. And, if I flip that on its head, we are seeing the more educated or thoughtful investor seeing huge opportunity. We know that globally, new investment into clean energy has now overtaken new investment into oil and gas. We know there's a geopolitical race on. China, the US, Europe, trying to gain economic supremacy in clean energy and lithium supply and sectors and parts of the economy that will drive the next 100 years of development, not the last 100 years. And investors are rightly wanting to be accessing that growth.
Okay, so let's break that down a little bit. When we're talking about ethical investing, what does it look like? What sort of companies make the cut? Is it about screening out? Is it actually about engaging with companies to try and change their way? We've seen that with Origin Energy seemingly over the past 18 months or so. Just what does ethical investing look like?
Yeah, it's a great question. And look, it can be confusing because there's lots of different terms as well. I'm sure, some of the listeners have heard descriptions like socially responsible investing, sustainable investing, even impact investing. But essentially, it's an investment approach that looks to achieve, on the one hand, what all investment managers are trying to, being strong investment returns. But unlike many managers, also seeking to generate positive social, environmental, or other impacts alongside those financial returns. So the key difference is that it's about achieving both, not one or the other. So look, take our business at Australian Ethical. We're a listed fund manager with a deep track record of outperformance of our various competitive benchmarks for the investment performance of our funds. But we achieve that partly because of, and certainly while working to a specific ethical charter, which provides the framework for how we make our investment decisions. To give you a sense to your question of what we're in and what we're not invested in, examples of sectors we're in would include or let's start with what we're not in. We're not in fossil fuels, gambling, tobacco, weapons manufacture, and we're not in certain countries or even companies or regions that have poor human rights records. But we do invest, on the other hand, in companies that make a positive contribution to the world, like IT, healthcare, sustainable agriculture, energy transition companies, companies with significant interests in things like lithium, mining, which we know is important for the future economy. But every single investment we make is measured against our full ethical charter. So, interestingly, while we do invest, for example, in mining lithium, because we know that's important for electric vehicles and others, if that lithium comes from the Congo and there are human rights issues in relation to, say, the treatment of workers there, we won't invest in that. So really important. We're looking for great investment outcomes for our investors, but also things that are helpful to people on the planet.
Stay with me, John. We'll be back in a minute. My guest this morning is John McMurdo, CEO of Australian Ethical. What about returns? Because people invest for a return. In fact, 99% of us invest for a return. There might be some who do it more altruistically. Can you match the returns as an ethical investor against someone, particularly in recent times, who have put their money into energy stocks, for example?
Yeah, look, our investment performance is very strong. So the short answer to that is yes. We've got more than 20 years now of outperformance of our benchmarks. We have a range of funds and superannuation options. That's things like diversified portfolios across a range of asset classes or single asset classes like Australian shares. So to give you a sense of returns, our Australian shares fund is one of the top 5 performers in the overall market over the last 10 years, and that's 8.9% per annum annualized. Our international shares fund has delivered 8.6% per annum over that same period. And our high growth diversified fund, really consistent, strong returns as well, averaging around 7.5% per annum. So look, some fabulous sectors, new world, new economy sectors and companies that we invest in. And to your question, about fossil fuels, you're right. That makes up a large part of the Australian market. But, there are many, many other sectors, both domestically and internationally, that are attractive. And I think, Sean, some investors mistake, us for not being able to invest in mining, where in fact we are in mining. We're in lithium mining, for example. And, that's been an incredibly attractive part of the sector. So we're able to play the mining theme, but we think we do that in a really smart way into a part of that sector, which we think is part of the new world economy.
Okay, what about the idea of engaging with companies whom may be in areas that you're not interested in, but kind of the argument being if we engage, we can help them change. And just along with it, I always remember talking to someone about Sydney Airport when it was listed, and Sydney Airport went from a bad to a good because plane noise decreased enormously. And so suddenly, like an asset can actually shift from one side of the ledger to the other. I'm just kind of interested in how companies can change and whether, as a large investor, you should be part of that process.
Look, we think it's important. Engagement's a big part of our activity, whether we're invested in the company, and clearly we do that in those situations, but when we're not as well. So, it's not just about investing capital. That's really important, to invest capital into the right sectors, but it's putting our mouth where our money is as well. Often working with companies, to help them think about how they can improve their own practices, sometimes putting them on notice, voting certain ways at AGMs, and sometimes it's more public. For example, we've been seeking to hold Lend-Lease to account for one of their projects at Mount Gilead, which, we think is bad for, koala populations. So, really important to use your voice and brand to bring effect to positive change.
Greenwashing, I want to talk about that. ASIC's been talking a lot about it. How do you know, as an investor, how do I know that what I'm investing in, the company's doing what it says it's doing?
Yeah, look, it is concerning. I think even last week I read a report from Investment Trends that said now something like 35% of Australians were deterred from investing in responsible products due to greenwashing. And Sean, I've been predicting this for some while. As Australia's original ethical investor, we knew there'd be a number of sort of fly-by-night operators pop up in the market, and even mainstream investment houses putting a thin veneer of ESG on a fund and marketing to the uninitiated. But we are seeing now, I think, the next phase of that cycle play out, where the regulators are cracking down on greenwashing and calling out that behavior. And I think that's healthy. We actually need a strong, thriving, ethical sector, and consumers need to know what they're buying. So to your question, my advice to investors concerned about greenwash is look beneath the bonnet a little more closely. In fact, look a lot more closely. Look at what's actually in the portfolios and see if that aligns with your own values and sense of what is actually ethical or responsible. Look at how the company conducts itself. Look at their sustainability reports, the depth of the research the company shares, what the company advocates for, to your point, in its stewardship activities and its thought leadership on ethical issues. And so we're seeing at Australian Ethical, great stickiness of our investors and satisfaction of our investors. And we're seeing, some of those investment managers who sort of put up an early ESG shingle starting to vacate the field. But, this is the new way of investing where your money can do well and do good at the same time.
Okay, now Australian Ethical has been around since 1986. I mentioned that. You've watched the market grow. Where are we in our life cycle in terms of ethical investing? Do we still have a long way to go?
I think we're still at relatively early stages. And by that, I mean, if I look back 3-4 years ago, we thought the addressable market or those interested in this style of investing looked like something in the vicinity of 10% of Australians. We now know you can triangulate the research from the Responsible Investment Association, Investment Trends, many different independent studies that say that somewhere now in the order of 60 to 80% who have cottoned on to the fact that your money can do well and do good at the same time. And I think the other dimension we've seen, Sean, is, 4, 5, 6 years ago, it used to be the domain of the younger investor, those more concerned about the future of the world. But we're now seeing significant growth and interest from every demographic across the country, every psychographic. So it's becoming much more accepted, much more mainstream, and in fact, clear preference about starting to invest this way.
That's very encouraging. John, thank you for talking to Fear and Greed.
Great to be with you. Thanks, Sean.
That was John McMurdo, CEO of Australian Ethical, a great supporter of this podcast. This is the Fear and Greed business interview. Remember, this is general information only, and you should always seek professional advice before making investment decisions. Join us every morning for the full episode of Fear and Greed, Australia's best business podcast. I'm Sean Aylmer. Enjoy your day.